Good afternoon, ladies and gentlemen. Welcome to today's town hall. My name is Tali Mugala. I'll be your host for today's town hall. Thank you for joining us for yet another exciting town hall for the month of August. Our topic today is we're discussing market volatility and strategies on how to manage investment risk. Our guest presenter for today is Grace Soko. She's a member of CMAS, and she'll be taking us through these strategies and just telling us how best we can manage risk in terms of investment. So just before we start, we're going to play another video. Then we can start in the next minute or so, just to allow for more people to join us. Thank you.
Haha, mwachowanisa apo kuwina nakunungira richanga Richard in the world narabura fe pension yonse ero nomba nkaye nomba nakufamu nkayero pweshe ng'ombe shonse ero nomba mtware kwesa mpia. I am going to invest in a group investment so that I'll be getting 100% profit per week in the world in Bobondo Don Jojo. When I give them a 500, they will return a 1,000.
Naomba nikwie Soko kwene mkachita invest yo.
Bari untumine SMS in the world in Bobo Njojo. Tamwaitambe wino wa Zambia.
Mkarusenda na mawaponcho mkawekera mkuchura. Have you taken time to investigate the people behind those messages? Limbi scammers.
Iweka sacho, I'm a rich man. I speak money. Ni investment in the pangamo aichewe. I'm not donating money. It's not a fafa veve. Let's invest money. Mona, it's not a joke.
Baponcho mretekanya. Always make sure you deal with licensed financial service providers. Take time to ask around if the messages are coming from the legitimate financial service provider. So your messaging ilolekesha mwala sanga fati ni namba ya muntu fyalefu afe mtu minendalama michitena swindu aliempia. Lolesha po first mmone.
So barifo kunkuruka.
Always follow the do's and the don'ts of a smart investor. Be a smart investor to live better.
This message is brought to you from the Financial Sector Joint Messaging Communications, a partnership of Bank of Zambia, Pensions and Insurance Authority, and Securities and Exchange Commission.
Okay, thank you very much. Our tech team, I think we can now start our presentation. Okay, thank you so much. Okay, welcome once again to today's town hall. As already introduced, my name is Tali Mugala from the Securities and Exchange Commission, and thank you for joining us today. Our topic today is a very interesting topic, and we're looking at market volatility and strategies on how to manage investment risk. We have a professional in our midst today. This is Grace Soko. She's joining us from the Capital Markets Association of Zambia, and she will take us through these strategies. And just to start our program, I just go through a bit of some rules. So we will have 30 minutes of the presentation, after which we can open up the floor for questions. So if you have got any questions during the presentation, please just take note. You can post them in the chat. The team will be able to respond to them after the presentation. Or after the presentation, you can raise your hand and we will allow you to speak. I'll now hand you over to Grace. Grace, welcome. Thank you for joining us.
Good afternoon. Thank you so much for inviting me for this. I'm really excited to share insights, and good afternoon to everybody.
Afternoon, Grace. Over to you. Please go ahead with your presentation.
Okay. So good afternoon, everybody, once again. As Talita said in her introduction, my name is Grace, and I am a licensed financial and investment advisor, as well as a member of the Capital Markets Association of Zambia. I'm very excited about the topic for today, particularly because we are in a very exciting time in our capital markets where we're having a lot more participation, and would love to share a lot more information that can help you to make more informed decisions. So to begin with, when we talk about market volatility, the most important thing to remember is that market volatility is normal. It is not so much of a cause for concern when you see dips and highs and lows in the market. It is normal to have a little bit of volatility. And volatility in this context that we're talking about, particularly for capital markets, represents the prices, like changes in prices, things that would affect your changes in prices on the capital markets. If we're talking the LUSE, which is the main stock exchange, as I go through the presentation, I will give a little bit more information on that. Things that would affect that are your prices of copper. Copper is one of the, I would say, biggest exports that we have, if not the commodity that we export the most. And changes in the prices do tend to affect our markets. Of course, exchange rates, the dollar to the kwacha, that does also affect our markets. And in emerging markets like Zambia, we do tend to have a little bit more volatility because we are a bit more sensitive to what's going on, especially in the global context. So it's very important for us as we are going through this conversation to always bear in mind that, number one, volatility in the market is normal, and also you can mitigate as far as your investment strategies. And we will discuss that a little bit more as we go on. So currently in our capital markets, we have the LUSE, which is our primary stock exchange. That's one of the capital market avenues that you can go into. The LUSE was established in 1994, and we have a market capitalization of 315.4 billion kwacha, which is quite impressive. I think the team has done an amazing job at LUSE. And we're really excited about the growth that's happening there. The key sectors on the LUSE are your mining, banking, telecoms, agriculture, manufacturing. It is spread out across different sectors. And as we go on in the presentation, you will see how knowing the different sectors on the LUSE will be a good mitigation strategy as far as diversifying your portfolio. Understanding how to make, I would say, a good balanced equity portfolio. We will discuss that as we go on. As far as currency impact, kwacha volatility does have an impact on the return of your investments, particularly if you are dealing in other currencies. Also, remember your exchange rates on a grand scale of things also has some kind of an impact locally, even in terms of inflation. As the cost of importing goods goes up due to volatility, kwacha exchange rate volatility, you tend to see it affect inflation. And inflation is basically the rate at which your prices are increasing in an economy. For the LUSE, we do have our regulators, who are the Securities and Exchange Commission, who provide oversight just to make sure that everything happening in the market is above board. I think it's very important as an investor to play in heavily regulated industries. It does give you some form of a protection in the sense that you're putting your money into something that is regulated, meaning there is a way of recourse should something go wrong. So it's very important as an investor to fully understand who the regulators are in the different sectors that you're investing in. Today, we're dealing particularly with the capital markets. And we're starting off with the LUSE. This is what we were talking about just now. So when we're talking about the sources of market volatility in Zambia, you have to put it into two categories, which is number one, your internal forces and your external risk factors. So on the domestic side, your commodity price fluctuations will have an impact as far as risk. And the reason that we're talking about this is to do with, if you want to go into the equities market, for example, equities is basically investing in stocks. You need to understand that fluctuations in the copper price may have a trickle-down effect on the stocks that you are investing. Remember, copper accounts for 70% of our export earnings, and the price of copper is what will also indicate, it's a good indicator as far as how the economy is doing, because the more copper that we export, obviously the more Forex that comes in, and you'll see that even the exchange rate starts to stabilize a little bit. Secondly, your currency and exchange rate movements will have an impact. It is a risk that you need to consider. In my experience, I've had a few people ask me, should I convert my dollar into kwacha and invest it? Or should I convert my kwacha into dollar and then invest it that way? So it's very important for you to take your exchange rate movements into consideration as part of your planning for your investments. Policy and political changes. Now, in Zambia, we are blessed in the sense that we have a very good working democracy. We have our elections every 5 years. And of course, with that change in government comes a change in who is leading the economic policies. And depending on the emphasis or the focus areas that a particular government may have, you'll find that certain sectors will perform better than others. Of course, the main idea is to have all of them performing at optimal, but we will find that certain administrations will place more, I'd say, emphasis on certain sectors. So political and policy changes related to your economic policy are risks that you also need to consider. Inflation, which is the big buzzword, we need to be cognizant of inflation. Inflation, we got some very good news about it today. Inflation has slowed down to 12.6%. So it's down from 13% last month and 14.1% the month before that. So we are getting into a situation where inflation is stabilizing, because remember, as an investor, your main interest is on what is my real interest rate growth. And the real interest rate growth, we're referring to the difference between inflation and the interest rate that you are earning on a particular investment. So as inflation goes down, ideally, if you've locked in your money into an investment that's giving you a rate that's above inflation, then you're actually growing your money in real terms, and you've got a real capital preservation element there. Other domestic factors which we need to take into consideration is infrastructure development projects. Of course, infrastructure development is always a good indicator that the economy is moving in the right direction. Agricultural production variations are also something that you need to consider. We recently got the good news that we're having a bumper harvest. And because of that, food inflation is reducing. And that reduction in food inflation is what's also influencing overall inflation. And that's why you can see the rate going down. So as an investor, it's very important for you to remain up to date with what's going on as far as your domestic factors are. External factors that you need to consider, your global economic and political conditions. We will not mention names, but I'm sure you're aware of a lot that's going on in international trade, particularly with tariffs that are going on. That has a real impact on your investments as well. International commodity demand, this also speaks into the previous point. Of course, with tariffs, it means that sometimes demand for certain commodities may reduce. Remember, I spoke about how the price of copper is also one of the things one of the factors that you need to consider. Foreign investment flows are also something that you need to consider. Pay attention in the news to where the money is going. I think if you've been following the news lately, a lot of money is going into your energy sector, particularly coming up with solar energy. The mines are coming back online and almost reaching full capacity again. So that gives you an indication of which sectors in our economy would be a good investment. Interest rate changes in major economies. We just recently saw that inflation has gone up to, I think it was 3% in the UK. of course, that's a good indicator of where their economic policy may shift to. Look at economies where we have major trading agreements with the US, in the Euro bloc. Those will give you an indication of where we are going in terms of the economy. So when we're talking about investment risks, which comes back to what the topic of today is, there are three main types that you need to look at. So number one, you've got your market risk. Your market risk is more to do with internal or domestic risks. So you're looking at things like kwacha devaluation. The most simple way of explaining it is what you could buy with 100 kwacha today is not what you can buy with 100 kwacha maybe 2 or 3 years from now. And that's because of inflation. I always give the example of the price of a big bite too. When we go to Hungry Lion, 5 years ago, if you went with 100 kwacha, you'd probably come out with 5 big bite twos because they were about 20 kwacha. Right now, 100 kwacha is only going to get you 1 pack of Hungry Lion. And as an investor, you also need to plug inflation and interest rates into your planning, because it means that whatever money that you're saving now for future use, it needs to be growing at a rate faster than inflation so that you preserve your buying power. Yeah. When we talk about liquidity risks, and this is to do with the market, particularly when you're looking at the stock market, there are certain stock which are a little bit difficult to find, but you need to take that into consideration as you are building your portfolio and trying to pick which stock to invest in. You need to know which shares are more easier to find than the others. When I buy these shares, how easy is it for me to sell them? Are they what we refer to as sticky shares? Are these shares that when I buy them, I'm going to be stuck with them? And when I want to get rid of them, it may take some time. If I'm in the market for a specific type of share because I want to grow my equity holdings in a specific sector, is it a sector that I can easily find shares in? Do I need to realign my portfolio? So these are some of the risks on a market basis. Your specific risks, this is in a situation, again, I am emphasizing a lot on the equities because that in the capital markets has the most application to the topic. Company-specific factors. As you are choosing your stock, it's important for you to know what direction the company is going. Are they in an expansion phase? Are they in a contraction phase? Are they looking to go into different sectors? Does it fit in with your own personal goals? There are certain people who, based on their religion, are not able to invest in certain stock. So you need to take that into account, your personal beliefs. There are company-specific factors that you need to consider. As far as sector concentration risk, now here what we mean is, as you are building your investment portfolio, be very careful not to be too heavy in one sector. I know when it comes to stock investing, a lot of people like to say, I buy with my feelings, which is great initially, but we need to have a research-based approach to how we are building our equity portfolios. And it's very important that you spread your risk across the different sectors. I would say a fair spread would be to have a little bit of telecoms, a little bit of mining, a little bit of banking, and you spread it across, even FMCGs, which is your fast-moving consumer goods. It's very important for you to balance it out and make sure that should there be a shock in one sector, God forbid something happens in the mining sector, and you've got all your shares sitting in a mining company, you will be able to balance out whatever knock you're going to have because you've got shares in other sectors. So be very cognizant of the risks in the different sectors as you are making your investments. When we talk about country risk, now, like I mentioned in my introduction, Zambia is blessed to have a very stable political environment. Our democracy is pretty smooth in the sense that we don't necessarily have political violence every time there's an election coming up. So we are quite politically stable, and I think that's why we're also a very attractive investment destination. When it comes to regulatory changes, I spoke about how with the LUSE, we have a regulator in place, which is the Securities and Exchange Commission of Zambia. Everything that you are doing is governed by policies, and there is a regulatory framework that is there to protect you as a consumer. So before you're investing into anything, ask the questions about what are the regulatory frameworks, and do a little bit of research to find out how easily does policy change around how investments are governed. And we talk about economic policy shifts. Again, this is a risk in the sense that depending on what position a country is in their economy, you may find that policy shifts are done almost overnight. If you look at the direction that Bank of Zambia is taking, they are trying to get inflation back to single digits. And because of that, a lot of the policies that they are introducing is a way of curbing inflation, or at least slowing it down, so that we get back to a single digit range of between 6 and 8%. It's taken a little bit of time, but we can see that the work that they've put in is starting to work. And we're seeing inflation is slowing down. Like I mentioned, we were at 14% in June. July, we got to 13, and now we're at 12.6 after the announcement today. So it is a very good indicator in the sense that the economic policies are starting to work. And as an investor, it's a good thing to keep in mind. When it comes to credit rating impacts, this is something that, again, regulators are working on just to ensure that as you're investing in these different vehicles, let me call them that, in institutions, they look at a whole comprehensive risk assessment, which includes your credit rating. As a country as well, for those of us who pay attention to international news, your Moody's ratings, as far as how likely are we to pay back debt, that affects the way that foreign investors will look at the country. So these are the three different types of investment risks that typically come up. And as we go on, I will delve a little bit deeper to make it a lot more applicable in our context. So when we talk about strategies to manage investment risk, there are basically three things that you need to look at. Number one, you need to look at diversification. So diversification implies not putting all your eggs in one basket. It's very important as you're doing your investments not to, I would say, overload one basket and put all your hopes in one basket. You need to spread it out, and that's a way of spreading your risk. The second way is asset allocation and rebalancing. As we go on, I will unpack this a little bit more, but the most important word here is rebalancing. A plan that you made 2 years ago may not be the best option for you in the current situation. So you constantly need to be reviewing your plans and rebalancing your investments so that you're able to react to any shocks in the economy or in your investment field or sector. The third one is hedging. Hedging is basically a way that you're putting a bit of a stopgap. You're just trying to make a buffer for yourself so that you are able to mitigate risk. But as we go on, I'll unpack it a little bit more. So when we're talking about diversification, here we mean spreading your risk across assets and sectors. And this feeds into strategy 2, which is your asset allocation and rebalancing. When we talk about sector diversification, and this is now in the context of investing in shares, if that's what you're getting into, you need to make a balance between the different sectors. As I mentioned, the LUSE has done an amazing job as far as making it more accessible and more financially inclusive. More people are getting into the investments, but it's very important as you are buying your shares, have a strategy in terms of which sectors am I going to focus on. There are 21 listed companies right now, spread across the different sectors. It may take some time for you to spread it adequately, but it's important for you to have a strategy. Strike a balance between mining, financial services, telecoms, and your fast-moving consumer goods. There's a reason that we've picked on these four. So number one, mining. Remember, we spoke about how copper exports account for 70% of our exports, right? And the price of copper has been steadily rising. It has stabilized a little bit, but it is a good stock to have. Mining is the major sector in our country. Financial services, we're looking at banks. The main idea here is, regardless of where the economy is going, people need to have bank accounts. People need to transact. The banking sector is a very good area for you to have your investments in. When you look at telecoms, I always use this example. No matter how bad the internet service is, we are still going to buy SIM cards for a certain service provider. I will not mention which one, but it is one of those where communication is a very important sector. And it's one thing that regardless of where the economy is going, people will always need to communicate. When we talk about fast-moving consumer goods, on the Luce, we've got ShopRite. ShopRite is a very good example of how it's expanding quickly across the country. It's one of those places where, again, no matter how bad the economy goes, people need to buy their groceries. People need a place to go and buy their things. If you're looking at Zambia sugar as well, again, whether the cost of a 2 kg of sugar is 100 kwacha or 50 kwacha, when you make your tea in the morning, you still want to have sugar. So it's one of those where be strategic in how you are diversifying your investment portfolio. And if you're able to spread it across these 4 major components, then you've got a very good risk spread. The second portfolio diversification point is geographic diversification. We are in what a lot of our current administration is calling a land-linked position. We are centrally located. It's very important for you to include regional and international exposure in your portfolio. As you grow in your investment journey, you will reach a point where you want to look outside of Zambia and you want to see what opportunities are there. And we are blessed in the sense that we are able to easily access other economies like Malawi. They've got a very fast-growing stock exchange. We've got South Africa. We've got Botswana. We are land-linked. So it's very easy for people to expand into those other markets. The third portfolio diversification point is an asset class diversification. This is key to a successful and balanced investment portfolio. It's very important for you to combine equities, which is on the Luce, bonds, which is your government bonds, and money market instruments, which are your unit trusts and fixed-term deposits with banks, your traditional banking products. Again, this is a way of spreading your risk. Also, remember, as you are doing your investments, your individual risk appetite is also very important. You need to play within your own levels of how much risk you can take. I like to give the example of low-risk investors are people who, if they could keep their money in a mattress under their bed, they would do it. These are not the people that you need to be talking to about the stock market. They're people who are big risk takers, go big or go home. You tell them about a government bond, they don't want that. They want big returns based on big risk. So it's very important as you are doing this, in as much as you may lean more towards one particular asset class because of your risk appetite, it's also important to balance it out. Then the last area of your portfolio diversification is currency diversification. It's very important for you as we are growing our portfolios to have a little bit of dollar-denominated assets into your kwacha. And this is a way of hedging your risk across different currencies. But in the next slide, I will talk a little bit more about this. So your strategy 2, which feeds into the first strategy that we spoke about, is asset allocation and rebalancing. Again, I spoke about low risk, medium risk, and high risk. The terms can be interchangeably used with conservative, moderate, and aggressive, yeah? So someone who's a conservative investor or a low-risk investor, this is the example that I gave. Somebody who, if they could keep their money in a mattress under the bed, they would. These are people who are more comfortable playing in the realm of government bonds, maybe treasury bills, things that have a fixed income nature. It's very predictable. You know what you're getting. You know when it's maturing. You know when to expect your money. They tend to have a higher allocation in the government securities region. 30% can go into money markets. This is just to maintain your liquidity levels. Again, when you go to a bank and you agree on a fixed term deposit, the rates are predetermined. You know what you're expecting. It is predictable. And then include a 10% in equities just to make sure that everything is spread out. I do get asked the question, where does real estate fit into this? As a conservative investor, you can see how to play around with the bonds and the money market allocations, just so that you can fit in some real estate in there. But it is important to diversify and not have all your eggs in one basket, meaning all your eggs in real estate. When you're talking about moderate, these are people who are a little bit open to risk as long as it makes sense. And depending on how much they have to invest, that's a good allocation where you can split it 50% in bonds, 40% in equities, and 10% in alternatives like your real estate. Aggressive ones, these are the go big or go home crew. Sometimes I call them the aviator gang. So the aviator gang is a little bit more aggressive. They are open to big returns as long as there is a possibility, they're willing to take on more risk, as long as there's a possibility of bigger returns. So these ones are more likely to play in the equities field, have a little bit of bonds, have a little bit of fixed term deposits. These are also the ones who go into private equity, your angel investors who want to get into investing in other businesses. They're more open to risk. Now, I spoke about rebalancing your triggers. It's very important, and I believe SEC has also been having a campaign around this, about consulting licensed financial advisors. Now, the reason that we emphasize this is there's a lot of information that's out there, and sometimes that information can be overwhelming. And in as much as we may be able to do our own research, it's also good to have expert guidance when it comes to your quarterly reviews. It's very important for you to sit down, look at how your portfolio is looking. What are your returns? What is happening in the economy? Where is the economy going? And review how it is that you want to rebalance your portfolio if need be. A good indicator also is if you see that your portfolio is leaning too much on one side. Again, based on your risk appetite, this strategic asset allocation is merely a guideline. It's not a hard and fast rule. But if you've set a goal for yourself to say, I need 70% in government bonds, and you find yourself in a position where you've got 75 or 80% in government bonds, you now need to sit and think about how you can reallocate, because you're at a risk of putting all your eggs in one basket. Major market events and policy changes may also shift your investment strategy, and it's very important to consult experts who can help you to, I would say, interpret what's going on. We recently heard about the withholding tax on government bonds going up from 15 to 20%. It's very important for you to understand what that impact has on your future returns. And it may be the trigger for you to rebalance your portfolio if you're too heavy in government bonds. Currency movements also. There are certain people who hold investments in different currencies. If you see that the kwacha and the dollar rate is not favorable for you anymore, you may need to reconsider how you're allocating your money. But again, it's very important for you to consult licensed financial advisors. The Securities Exchange Commission does have a list of advisors that you can refer to. So please make use of that resource as you are thinking of rebalancing. When we talk about local considerations as part of our asset allocation and rebalancing, consider your tax implications. I did speak about the withholding tax. It's very important for you to factor that into your planning, because that means the amount of your coupons are reducing. If you look at your kwacha and USD denominated assets, you also need to look at how the exchange rate will affect that. So strategy 3, I'll touch on it very briefly. I know Stally is going to warn me about time very soon. When we're talking about hedging techniques, which is how do we protect our money against downside risk? When we speak about investing in USD, dollar is what we call a hard currency. We call it a hard currency because the inflation rate in the US is at about 2%, if I'm not mistaken, which shows that it's not really going to fluctuate as much. And because it's a hard currency, most countries use it to trade in. So you don't really see as many dips or shocks in that currency. And it's easier for you if you're saving long term to have your money in dollar. But compared to our kwacha, kwacha is quite volatile. I think if we remember at the beginning of the year, we actually had fears that the kwacha would reach 30 to the dollar. And right now we're sitting on about 23, 22. So you'll find that people who gambled and changed money into other currencies may be kicking themselves right now. So it's very important as you are considering your hedging technique to consult with experts who can help you on how best to do this. Yeah. When we're talking about, that's on currency hedging. When we're talking about interest rate hedging, there are two options that you have. A lot of capital market operators that's in the collective investment space are leaning more towards government securities as an interest rate hedge. And the reason that they do this is because when you purchase a government security, your inflation rate is fixed for the duration of that government security, be it a treasury bill or a government bond. So if your bond is running for, let's say, 15 years, whatever rate you've locked in at the beginning will be maintained up until the point of maturity. And the beauty with that is it's easier for you to do your long-term planning as you are doing that. Now, when it comes to commodity-linked securities, we do have the Zambia Commodities Exchange, which is doing quite a good job as far as the agricultural sector on maize and fertilizers, but it's also one way that you can hedge against shocks as far as your returns if you're into commodity exchanges. And I believe that the regulator SEC is working on this point. So in the interest of time, I will try to finish up very quickly. So when we're talking about implementation and best practices, how do you build a resilient investment strategy? So number one, do your risk assessment. You need to understand what your risk tolerance levels are. Certain people can handle the shocks of the equity market, others not so much. So know where you fall. Understand how much risk you can take. How much are you bringing to the table for your investment? Because if you're starting off small, you can't really afford to lose a lot of money. Also, your age will determine how much risk you can take. As you grow older, you've got less time to wait for the market to correct itself. So you need to be very strategic based on your risk tolerance. Number two, your portfolio construction. Make sure that it's diversified. As you are doing your research and consulting with licensed financial advisors, they'll be in a position to let you know what allocation best works for you. And then regularly review your investments. You need to make sure that the strategy that you've implemented in January is still applicable in August. So regularly review your performance of your portfolio. And fourth, stay informed. As an investor, you can't afford to have your head buried in the sand. Know what's going on in the news. Find out what's going on. What is the price of copper? Know how it affects what you've invested in. What's the exchange rate? Is it becoming more volatile? Is it stabilizing? Is the kwacha gaining? Is it losing? These are things you need to know. Your local economic indicators, things like the interest rate, things like inflation rate. Know what you're getting into. There's certain people who just invest and they don't really know what the interest rate is. Please know what the interest rate is. And that will be a good barometer of whether you're investing your money in the right things. And always always, always seek expert advice before you make any investment decision. As I mentioned, SEC has a database of licensed investment and financial advisors. Please consult the list and make sure that you've got yourself a licensed advisor who can help you in making the right decisions. And you'll find that when it comes to your key success factors, think long-term. I know a lot of us, when we're starting out, we always say, I just want to try. I just want to see. But as you gain confidence, start to think more long-term. Because when it comes to investments, time and consistency are your best friend. The more time that you have, the more compounding can take place, depending on the investment vehicle that you're going into. The more, if you're going into equities, the more time you have, the more you can ride out the dips and the highs of an equity market. Keep an adequate emergency fund in stable assets. As far as the Zambian capital markets environment, we do have collective investment schemes, and it's very easy for you to find out which ones are regulated. Again, SEC has a list of the regulated collective investment schemes, which are also trading as unit trusts. That's a very good way of having an emergency fund in a stable asset, because fund managers are working at preserving the value of your money. And it's a good way of having an expertly managed fund that you can easily tap into. And stay disciplined during market turbulence. It's very easy to get scared and want to pull out or to, jump on the latest fad, but please remain disciplined. When you make up a plan, stick to it. And continuously educate yourself on market developments. You've got tools like the SEC Townhall. So thank you very much to SEC for putting this together. And I know it happens every month. Please make sure that you stay informed and listen to experts who come through and give you the advice to help you make the right decisions. And also leverage technology. We've seen quite a lot of advancements in the AI sector. They're able to predict where things are going. Some even help you to pick stock. So if you can, do your research on it and see how AI can help you. And then, of course, when it comes to your research resources, I've had a few people ask me, but where do I find information? The Luce website has a lot of information as far as the market. It has daily updates and it comes up with reports as well. Bank of Zambia also has a very good resource center where you're able to see economic indicators. I spoke about monetary policy, interest rates. That's a very good place for you to look at your monetary policy and economic indicators. And then, of course, you've got the SEC investor education materials. Their website is full of information that you can take a look at. And you have your town hall meetings as well. So, Stali, I know I went a little bit over time, but thank you everybody for paying attention. I'd just like to close by saying the key to successful investing in Zambia's capital markets is understanding the unique risks, your risk appetite, understanding the opportunities, diversify, and to remain committed. So thank you so much, Stali. Over to you.
Wow, Grace, thank you so much for that very, very insightful presentation. I've personally learned quite a lot, and I'm pretty sure our audience out there have also learned. I must mention that we are also live on Facebook, so we have an audience there and also an audience here on Zoom. We'll now get into our Q&A session. I know there are a lot of burning questions from our audience. Okay. So already some comments that are coming in, positive comments, Grace. Just the right information that I needed at this point. This is coming from Marjorie Mwanza. And she said it's a very insightful presentation and she's learned quite a lot. Very informative, and thank you very much. Also, Bevan Mutabula says, thank you for the presentation, very informative. Is it possible to get hold of the presentation? Yes, we will share the presentation the same way that we shared the link to the meeting. So we'll definitely share the presentation with everybody and also post it on our website for you to be able to have the material with you. Okay. Mm. A very interesting presentation. Okay, I'm looking for questions. Please send us your questions. I don't see any questions here yet. Okay, here's one. As an extremely risk-averse individual, can I get away with having a portfolio with 100% bonds? Grace, what's your take on that?
The short answer would be yes, you can get away with it, but then the question is for how long?
Yeah.
What we've seen in the market right now, the rates have been, I don't want to cause concern by saying it's been on a decline, but obviously those who bought bonds last year, for instance, a 15-year bond was at 27% at some point, and we're currently sitting at 20% now. So it's very important to diversify. Obviously, again, this is where the advice of consulting a licensed financial advisor comes in, because they'll at least be able to guide you on how to diversify in a conservative way. There are other options that you can explore, such as collective investment schemes. That's always a very good option for conservative investors. And like I mentioned, there is a list of collective investment scheme fund managers on the SEC website. So please take a look at it. Do your research on the different fund managers, and we will be able to assist.
Okay, thank you for that response, Grace. And also for the list of our licensees, we have posted that in the chat. There's a link that has been posted there for all the licensed investment advisors, representatives that we have. So that would be a good resource for everybody to just take a look at. Okay. So the next question is from Masao Sopiri. Are you open to monitoring? And if so, how do we reach you? Or to mentoring, sorry, mentoring, and how do we reach you? So this is for Grace. How do they reach you, Grace?
Oh, wow. Okay. So I'm trying to find the diplomatic way of saying it. So yes, you can reach me through LinkedIn. If you search for Grace Soko, my details will pop up. Also on Facebook, if you search for Grace Soko, the details will pop up. And then we can see how to help you.
Yeah. Okay, so that's how you can get hold of Grace. And like we mentioned, we're doing this town hall in partnership or collaboration with the Capital Markets Association. So it would be good for you to also just interact with the Capital Market Association, because the members of the association are all licensed representatives of the market, different professionals who can help you with various needs that you may have as an upcoming investor or a current investor. Okay, our next question is coming from Margaret Njovu. Are there any institutions that offer offshore investments that require principal amounts as low as 500 kwacha? Do we have any institutions like that, Grace?
Yeah, we do. We do have a few licensed. I keep emphasizing on licensed providers of these services. Again, the SEC website, I believe Chodo has actually posted something in the chat. There is a list of what we call dealers and investment advisors. I believe the list is segregated to show those that are offshore and those that are local. So please make use of that resource so that you are able to approach a licensed practitioner, and then they will be able to guide you on how to do your offshore investments.
Okay. Yeah, talking of offshore investments, what are the USD investment options that are available in Zambia? This is coming from Tumbo Nasilele.
Okay. So we've got quite a variety, actually. You can go the traditional route. There are a few banks that offer USD denominated fixed term deposits. I do know that there's certain banks, Stanchart comes to mind, that offers more of a niche offshore investment where it's USD denominated, and they can have a chat with you on what your budget is, where you want to invest it in. And there are a few offshore mutual funds that they can advise. Under the collective investment schemes as well, there are quite a number that offer USD denominated funds that are sitting locally. So that should give you a little, as opposed to investing in something offshore where the money actually leaves the country. So I would say, depending on what your risk appetite is, you can go the traditional banking route, or you can explore the collective investment scheme market. And there are a few USD denominated products.
Okay, thank you so much, Grace, for that. We have a question from Stacy. So Stacy is asking that if a person is okay with high risk and moderate investment, like safe, how would you describe that person according to how they handle risk?
Okay. So I like to put a little bit of a number to it. So if you are, let's say, a moderate investor, there are degrees to moderate. If you're talking about an aggressive investor, someone who's more open to risk, there are also degrees of how aggressive you are. So for instance, if you're looking at a scale of 1 to 10, the easiest thing for you to say is, if I'm very conservative, I'm probably a 1 going all the way up to maybe 3. And then if I'm a moderate investor, I'm a 4 going all the way up to 6. And then if I'm an aggressive investor, I would be 7 going all the way up to 10. And again, this is where a consultation with a licensed financial advisor helps, because they are able to assist you. I've had a few instances where you've sat down with somebody and they say, I'm very open to risk. But as you deep dive into the conversation, you actually realize that they're more on the moderate side. So it's very important for you throughout your investment journey, identify a financial advisor, a licensed financial advisor who's going to guide you, particularly on the risk appetite, because I think it's a very fluid concept and it's very subjective. What you may consider conservative may not actually be conservative. And what you may consider high risk may actually be on the moderate scale. So it's very important to have an objective, I'd say, advisor to bounce off your ideas on.
Okay, thank you for that, Grace. So there are a number of questions that are speaking to the trading of bonds. So I'll quickly just refer everybody talking about how to invest in bonds to the Bank of Zambia investment portal. You're able to access ways on how to invest in the bonds, like a guideline on how to invest in bonds there. But Grace, maybe speaking about bonds, could you also just give guidance on how best one can invest or participate in bond trading in the secondary market? I do understand the Bank of Zambia investment portal is for the auction during the primary market, but what about in the secondary market? How does one go about that?
Thanks, Tali, for that question. We've actually got a lot more people trying to get onto the secondary market. And maybe just to give a little bit more context. So when we talk about the primary market, this is where you're buying directly from Bank of Zambia. And you're only able to do that during what's called an auction week. And that auction week is only 1 week in the month, usually the 3rd or the 2nd week, where you can purchase government bonds directly from Bank of Zambia. The secondary market is open throughout. So at any point in time, you can either go to the LUSE. The LUSE actually has listed bonds there that you can purchase. Also, I've noticed that there are a few banks that have set up a portal. I believe I saw something recently for Zanaco. So they do have a secondary market listing for Zanaco account holders only at the moment. But the safest bet would be, if you are interested in buying a bond off the secondary market, number one, approach your bank, find out if they can assist you, or you can approach the LUSE directly, and they will be able to guide you on what bonds are available. The only limitation on the secondary market is that you may not have as much of a variety in choice, because you are buying bonds that are already running. and you will have to find a bond that matches the period that you're looking for. So take that into consideration, but the best advice I can give you is approach the LUCE. They do have a listing of bonds, and also approach your bank to assist you.
Okay, thank you so much, Grace, for that. And I hope that answers the question for our participant. Okay, so aside from unit trust, what other stable investments in the money markets can one use to build an emergency fund? This is coming from Wupe.
Okay. Wupe, I think when it comes to an emergency fund, it really also comes down to how easily do you want to access this money, right? The main idea with an emergency fund is it's a rainy day fund, meaning you're putting money aside in the event that should something happen, worst case scenario, you lose your job today, at least you've got 3, maybe up to 6 months worth of expenses saved up. Some people opt for a traditional savings account. Now, that traditional savings account basically comes down to your preferences of which bank you want to do it with. Others have the discipline to have a traditional savings account and not touch it unless there's an actual emergency. The beauty with a unit trust is that there's no ATM card, number one. Also, the beauty with a unit trust is that some of them have a limited or a minimum withholding period, meaning you are actually forced to not access that money. Of course, there will be a penalty if you need to, but there is a minimum investment period, which brings in a little bit more of discipline into the equation. So if you're not for the idea of a unit trust, there's absolutely nothing wrong with opening a traditional savings account. Certain people will actually go the route of saying, I want to have a fixed term deposit. Some banks offer notice accounts where you need to give notice when you want to make a withdrawal. There's no ATM card. So really just explore the options and try to find something that matches your particular needs, because it really just depends on what you find more flexible and more applicable to you.
Okay, thank you, Grace. Thank you. So we have another question from Philip. He's talking more of Zamith. What instruments can one trade on Zamith? Is volatility, and then he adds, is volatility the same as risk?
When it comes to Zamek, I muted. So when it comes to Zamek, that one is from my understanding. Of course, we'll need to do a little bit more research on it, and I'm happy to help you with that. For interest of time, I will say the major commodities there are your agricultural products, like your maize and your fertilizer. I've seen soybeans as well being traded there, but we can take it up offline, and I can assist you on a few other commodity exchanges that you can look at. When it comes to volatility and risk, volatility speaks more towards price fluctuations, whereas your risk speaks more towards what can jeopardize the growth of my portfolio. So in a nutshell, volatility is a type of risk. I don't know if that explains it.
Yeah, nicely put, Grace. Very
Yeah.
nicely put. Thank you. So there's an anonymous attendee saying, I have noticed that Rays have floated shares in USD on the LUCE. How is the performance of real estate firms in Zambia?
Okay, so REITs is basically the oldest, I would say, real estate investment, I'd say, group that we have. REITs has been performing quite well. The USD listing, again, that's another way of diversifying. If you are looking at having a US denominated investment locally based, I would say that real estate is a good investment, but as far as generic performance, we only have rates, which is now rate, as the regulated listed real estate trust, let me call it investment trust, that we can actually refer to and say that we've got documented information on. But it is something that is worth looking into. And again, I would advise that you do approach a licensed financial advisor in that sector who can assist you on more information to do with real estate investments, particularly if you want to get into real estate investment trusts or rates. Yeah.
Okay, great. So the next two questions are both speaking to unit trusts. This is Marjorie Mwanza, would like to know more about unit trusts and how they can start, where they can go to get the information. So where to get more information? Again, you can visit the two websites. You can visit the LUSE website as well as the SEC website and follow the links that have been posted in the chat. But Grace will definitely give more information to where we can get information on how to start investing. Then the second part of the question, which I'll marry to Alice's question, Alice Kalengo says, it's a beautiful presentation, Ms. Soko. My question is, would you advise someone with a few funds on the side, for instance, a 10K, with a low to medium risk to invest on the stock market or sign up with a fund manager or unit trust?
Okay, so I will marry the two by explaining what a unit trust is, and hopefully that will give some kind of an answer to Alice. So with a unit trust, you are basically depositing money into what we call a pot, and then the fund manager goes out into the market and invests the money on your behalf, and that's why we call it a collective, because it's different individuals putting money into one fund. The fund manager is then able to invest it into different assets depending on what the specific fund has as its asset allocation. So for instance, if you are depositing into, let's say, an equity fund, it is the fund manager's job to go onto the LUSE, look for the best rates or the best stock to invest in, come back to you and say, this is your share of the profit. Now, the beauty with that is it takes away the headache of you having to do the analysis and trying to figure out if dollar is at 20 kwacha or, 25 kwacha, what does this mean for me buying shares in Zambia Sugar? So it gives that headache of analysis to the fund manager, and all that you're doing is maintaining your monthly contributions. Now, if it's a fund that's diversified, that same 10,000 kwacha, I'll use that as an example, is now being exposed to different assets that ordinarily on your own, you may not have been able to do that, because with a collective investment scheme, you have the beauty of numbers. Because when the fund manager approaches, let's say, Bank of Zambia for a treasury bill or for a government bond, they're not just going with your 10,000 kwacha, they're going with the collective of what's been collected. And because of that, they're able to negotiate a better rate for you. Whereas if you had gone with your 10,000 kwacha to, let's say, a bank or another financial institution, the rate that you'd get may be considerably less. So when it comes to unit trust, they offer you flexibility in the sense that depending on the type of fund that you sign up for, there are different minimums that you have, minimum deposits, that is. So you can deposit as and when. It's not a situation where you need to wait until you reach a certain amount and then drop it into your fund. You can take a 1,000 this week. You can take a 5,000 next month. You can drop in a 500 another month. So it's really more of a flexible tool for you to grow your wealth. Let me call it that. And then the beauty with unit trusts is they also offer compounding on an annual basis. So the more, I would say, what's the word? Yeah. So the more you deposit, the more consistent you are, you find that your money grows. And in terms of how to get started, again, SEC has a list of the collective investment schemes and the fund managers. Take your time to look through it. There are contact details there as well. So please reach out to the fund managers and they will be able to guide you on the different application procedures. And you can look at their websites. A lot of them have a wealth of information there.
Okay, thank you, Grace. Ladies and gentlemen, I know time flies when you're having a good time. Like now, we're really learning a lot and having a very interesting and interactive session. And unfortunately, we are at the end. We've come to the end of our town hall, but I will take, I think, about 3 or 4 more questions because we have a lot of questions going on. And so let's just stick around just for a few more minutes. So the next question is from Nathan. It says if ShopRite accounts for 63% of the total market capitalization on the LUCE, what does this imply for market dynamics in terms of correlation, efficiency, and fund management strategies? Does it suggest limited investment options for fund managers?
Okay. So Nathan, to answer your question, and this may be oversimplifying, I would say no. It doesn't mean that fund managers are limited. Remember, ShopRite is ShopRite Holdings. So it's not just the ShopRite here in Zambia. Remember, ShopRite Holdings is also dual listed on the JSC, which is the Johannesburg Stock Exchange. So it is quite a big fund. But when you look at options that fund managers have, remember I stated that there are about 21 listed companies on the Lusaka Securities Exchange. So it's not to say ShopRite has the monopoly in terms of returns, because even when you look at the biggest growers, I think we've seen that Airtel has done exponentially well. It's growing quite fast and it's still available for people to buy shares in. When you look at Copperbelt Energy, I mean, we now have two Luce listed companies that have a market cap of above 1 billion kwacha, which is at CCM, as well as CEC. So there's quite a lot of, I'd say, options for fund managers to get into. And I would like to argue that since the Luce is still growing, it's an exciting time for fund managers as well as individual investors. I wouldn't say that ShopRite Holdings is limiting the options that fund managers have, but it is an interesting question.
Yeah. Okay, we have another question from Dolika. Dolika says, on currency hedging, how might having a multi-currency portfolio work, given that the kwacha often appreciates simultaneously against all other major currencies? So how does that work?
Okay, so when we talk about a multi-currency portfolio, we look at it on an individual basis, yeah? You'll find as you are having your sessions with individuals, they've got different goals. There's a reason why they're putting that money aside, right? Some people will tell you, I want to take my child to university in Europe. So in that sense, it wouldn't make sense for you to save in kwacha. As you rightly mentioned, the kwacha is quite volatile. And you'll find that by the time your child is about to jet off to the UK or to wherever, your kwacha doesn't have as much of a purchasing power. So you'll find that for education, particularly, depending on where you want to take your child, it may be more advisable to invest, not necessarily just saving, but to invest in a currency that the child will use in future. When you look at retirement, there are certain people who tell you, I want to retire to the Cayman Islands, or I want to retire to Portugal. Doesn't make sense for you to do it in kwacha. Again, as you rightly put it, the kwacha's performance against these major currencies may not be good. So again, this is where the concept of a licensed financial advisor comes in. It's all good and fine to hear a presentation saying save in dollar, but if your investment goals do not align with a saving in dollar as well as your income, because that's also a very important consideration. Are you earning in kwacha or are you earning in dollar? Are you earning in euro? What are you earning in? Because sometimes if you're earning in kwacha, it may be more advisable to keep it in kwacha. Or if you're earning in dollar, it may be more advisable to invest in dollar as opposed to converting it back to kwacha. So again, these are considerations that sitting with a licensed financial advisor really opens your mind up to which currencies you need to invest in. Because also, depending on what your investment goal is, you may have a scenario where you want to invest for the purpose of getting citizenship in another country so that you can continue on your business journey. So all these things are considerations that a licensed financial advisor will be able to unpack with you.
Okay, thank you so much, Grace. And we have now come to the end of our town hall because we're 10 minutes into our ending time. Thank you so much, Grace. Before we leave, I'll just ask our technical team, Cholwe and Sichoni, do we have any questions on our Facebook page? Are there any questions that we can quickly attend to? Anything there?
There's nothing on Facebook.
Okay, thank you. All right, Grace. Thank you so much for the lovely presentation and the insightful information that people have received today. I'm sure everybody agrees with me that we have learned a lot, and we'll definitely keep the conversation going. Please post on Facebook for further questions, and the questions that you've sent to us, we will definitely send responses via email. Grace will be able to respond to all of them. Then we can then email them to you. We'll email the presentation as well. Thank you once again for joining us. And if there's one takeaway that we are going to have today, firstly, diversification, and secondly, always deal with the licensed investment advisor before you make your investment. Whether you know your stuff or you do not know your stuff, please speak to somebody to just give you professional advice. Okay, thank you so much, everybody. We'll see you again next time. We have the town hall every last Thursday of the month. So see you again next month on the last Thursday. Thank you. Have a good day. Thank you, Grace.
This movie is sponsored by the Securities and Exchange Commission, the regulators of capital markets in Zambia.